Okay, let's talk about how the ultra-wealthy invest. Because right now, something huge is happening behind the scenes in the world of high-stakes investing. It's like a giant river of money. We're talking billions of dollars, has just completely changed its course. And this shift, it's quietly reshaping entire industries, way faster than anyone saw coming. So let's figure out where this river is flowing from. All right, just take a look at this chart. It's pretty wild. A couple of years ago, if you were an Indian startup, you were almost certainly getting your money from overseas. But now? The whole game has changed. The share of funding from right here at home has skyrocketed. We're talking it's more than doubled, jumping from just 15% to almost 40%. That's not just a small shift, It's a seismic event in the world of funding. So the big question is, where is all this cash coming from? I mean, this isn't some slow, gradual change we're seeing. It's a sudden flood of domestic money. There has to be some kind of hidden force behind a shift this massive, right? So what is it? So, Section 1, the rise of family offices. We're going to unveil the new power players. And to find that answer, we have to step behind the curtain into this really exclusive world of a new type of investor that's basically rewriting all the rules. And here's the answer. It's all about the rise of these private, super discreet investment firms called family offices. You've probably heard the term, but what are they? Well, think of them as the personal financial command centers for the world's wealthiest families, kind of like a mission control for a modern-day dynasty. So let's break that down. What exactly is a family office? Well, at its core, it's a private company set up to manage the wealth of just one single family. And I mean everything, from their investments and taxes all the way to their charity work and planning for the future. It's basically the ultimate tool for making sure that fortune doesn't just survive, but grows for generations and generations. Now, this whole idea, it's not brand new, not at all. It actually goes way back to the 1800s with the big industrial families, the Rockefellers and Morgans. In India, the first real wave came with the tech boom in the early 2000s. Think Infosys, Wipro. But the real explosion? That's happened in just the last 10 years, and it's all been fueled by the massive fortunes made in the startup gold rush. And when I say explosion, I mean it. Check out this number. Back in 2018, there were about 45 family offices in India. Today, there are over 300. That's a nearly 7 times increase in just a handful of years. It's absolutely staggering growth. Okay, next up, the Billionaires playbook and their 3-pool strategy. So you see this incredible growth, and the next logical question is, how do they actually invest all this money? What's the playbook when you're managing billions? Well, think about the challenge they're facing. It's totally unique. You've got to invest billions of dollars, but you also have to balance the risk for multiple generations of the same family. It's like you have a 25-year-old who wants to take huge risks sitting next to a 60-year-old who wants to be super cautious. And your job isn't just to make money this year. It's to make sure that wealth is still there 100 years from now. So here's how many of them solve that puzzle. They use what's called a 3-pool strategy. First up, you have the safety pool. It's a small chunk, maybe 10 to 12%, in super low-risk stuff just to protect the core capital. Then you've got the big one, the lifestyle pool. This is the bulk of it, 70 to 80% in traditional things like real estate and stocks. But then there's the aspirational pool. This is where they take their big swings, the high-risk, high-reward bets on things like startups. All right, next section, the patient capital advantage. And this is all about why family offices are so different. Because that aspirational pool we just talked about, that's what gives them a unique superpower when it comes to investing in startups. It's something called patient capital. So to really get this, let's just compare a family office to a traditional venture capital firm, or VC. It boils down to one simple but absolutely profound difference. A family office, they're investing their own money. A VC firm, they're investing other people's money. And trust me, that one single fact, it changes everything. See, because VCs are using other people's money, they are always on the clock. They have this fund cycle, usually about 8 to 10 years, where they have to sell their investments and return the money to their investors, hopefully with a big profit. But family offices, they don't have that deadline. There's no pressure to sell. They can be incredibly patient, sticking with a company for 10, 20, even 30 years if they want to. And that long-term view, that ability to be patient, makes them the absolute perfect source of funding for certain types of businesses. We're talking about the really tough sectors that just take a long time to pay off. Things like deep tech, climate solutions, and advanced manufacturing. These are the kinds of industries that just can't be rushed, and this patient capital is their lifeblood. And this patience, it's not just a theory. It translates into some very real superpowers in the market. For example, they can provide crisis capital, swooping in to save a great company that's just hit a rough patch. They can also be a long-term partner, holding on to their shares long after a company goes public, providing stability. They can offer more flexible funding that's based on hitting real milestones, not just an arbitrary timeline. And some even build entire platforms around a theme, basically transforming a whole sector from the ground up. So, our final section, fueling India's future, the big picture impact. Because you have to understand, this is so much bigger than just a story about how wealthy people invest their money. The rise of these powerful domestic investors, it's a massive game changer for the entire country's economy. Let's just look at the scale we're talking about right now. As of today, Indian family offices are managing over $30 billion in assets. Just think about that. That's a $30 billion pool of capital that's now being put to work right here, in the domestic economy. And that's just the beginning, because the pipeline for new family offices is absolutely massive. The number of ultra-high net worth families in India has more than doubled since 2018. We're now at over 13,000. That's a huge pool of potential new investors. But here is the truly mind-blowing number. Over the next decade, an estimated $1.3 trillion is expected to be passed down from one generation to the next in India. And what's crucial is that this new generation is more comfortable with technology and way more open to investing in high-risk startups than any generation before it. So let's connect all the dots. At a moment when foreign investment is actually starting to pull back, this new wave of homegrown, patient capital is stepping up to fill a really critical gap. This money, it's the fuel that's going to build the ambitious, complex, and crucial industries like deep tech and manufacturing that are going to define India's future.
So really, what we're watching is a historic cycle playing out. The first generation of tech entrepreneurs who made their fortunes in India are now turning around and funding the next generation of Indian builders. The question isn't, where's the money coming from anymore? We know the answer. The real question now is, what incredible, ambitious, long-term, nation-building projects will this new flood of Indian capital finally dare to build?